The only word of wisdom I have is get ready for automation and the financial systems that we know today disappearing.
We're diving back headfirst into the wild world of digital assets. From the meteoric rise of Bitcoin, currently trading at an all-time high of over 100,000, to the emergence of decentralized finance, DeFi, the future of money and ownership is being reshaped before our very eyes. To try to make sense of this rewriting of financial systems, I'm joined by Eric Pascal, Global Head of Digital Currencies for Standard Chartered Bank. Thank you very much, Eric, for joining us today.
Always a pleasure. Thank you.
Let's start with Bitcoin prices. It's about $100,000 at that level. What do you think is driving that? And also, how meaningful is this?
Wow. Well, right into the meat. Thank you, Pamela. So actually right now it's about 100,000, teetering 100,000, 99,500 USD equivalent. So there has been a number of drivers. If that's your question, I think everybody knows about the Trump trade. So there's ample support, shall we say, from an incoming government that is supportive of crypto trading, and Bitcoin is the lightning rod, if you will, for crypto activity and crypto interest. So people are now not doubling down, but I think they're increasing their Trump trade bets, and so you're seeing that resurgence, right? We've tested 90,000 levels, and there's a lot of, shall we say, support at that level on an institutional basis, and that's really what matters. So I'll get to your subtext question in a second, but that's where we see a lot of testing, and it seems to be a bounce, right? 89, 90,000, and it gets back up. So how meaningful is it? Well, I think the short answer is it is meaningful from the point of view that let's call it the financial industry, capital markets, et cetera, find it a speculative tool relative to other financial instruments, and therefore it's meaningful because it is a gauge of a broader economic system.
Which is that also what we're seeing with Ethereum, number 2? It's surpassing Bitcoin now, both in terms of value as well as in volume. Yeah. What can we make of this?
Yeah, let's talk about that. That's important, a very important piece of what I would call the real world connectivity or linkage to, let's call it cryptography or crypto or digital currencies generally. So Ethereum, not in value, but in volume and in transaction amounts settled, daily is around 1 million. Bitcoin related is less than half of that. Why that's important is Ethereum is a conduit, effectively, for generation of execution of smart contracts. Smart contracts are a way for the expression and the generation of any form of value to be expressed on a digital ledger, on blockchain. So that's important because now you can plug in real-world assets into a tokenized form, into a DLT form. So that statistic and that surpassing of Bitcoin-related transaction support or capability is to me at least, an extremely important determinant of how much and how fast real-world assets are now starting to enter the world of DLT and blockchain. So not crypto, real-world assets. And that's a really fascinating, at least to me, and that's what we're seeing with Ethereum. It supports ERC20 forms of tokens, which are then generated in a form that represents assets, in a lot of cases now real-world assets. The DeFi world that's constituted a lot of that heretofore has been very active in replicating lending, borrowing, deposit taking, etc. in crypto form. Let me give you an idea of what that really means in terms of size. So DeFi, various protocols, and you'll see this in a number of decentralized exchanges and how people express views from a crypto point of view and can generate yield by staking their coins, including Bitcoin. 55 billion, roughly. It's a moving target, but let's call it 50 to 60 billion US dollars of TVL, of total value locked, in the Clark's DeFi protocols. The real world is, and this is very nascent, early stage calculations from a number of my competitors, asset managers, institutional investment managers, even SWFs, is 5 to 6 trillion US dollars of tokenized loans, securities, repos, mortgages eventually, and so on and so on.
That's you're talking about since the creation of Ethereum.
Ethereum was created for that reason, to create a methodology for people to use smart contracts to generate value across a number of different applications.
So given its applications and sort of the linkage to real world assets and the tokenization, that's all of this that is taking place, does this then make Ethereum more mainstream?
The use of Ethereum smart contracts, yes. Is it now mainstream? No, but it is, to me, it's the linkage between the formulation of crypto value statements or the crypto ecosystem into the real world. So is it mainstream now? No, but it is the catalyst, if you will, for generating mainstream applications or real world asset applications into blockchain.
I suppose part of the risk management is diversification and finding things where there are less correlations. Is that sort of where cryptocurrency or digital currencies play a role in a portfolio?
Well, remember there has to be, for portfolio management, at least in the asset management world, investment management world, the large scale of what we would call institutional money, there needs to be large scale liquidity, right? So right now, that large scale liquidity is really only in Bitcoin. There's a number of other coins. Ethereum is probably second in terms of the availability of liquidity, but even then, you're talking about a couple of $1 billion, right? We're talking about investable markets that are in the trillions. And that's why, as you start to think about this as a real world economic system, this is a rounding error. I mean, it's making people rich, but we're talking about a global payment, a cross-border global payment world. That I'll say this, this is EY, it's not me, all right? EY pins this number at 156 trillion US dollars. Can you imagine? Stablecoin right now among the big majors, so you know them, USDT, USDC, and some others, right?
And you've obviously been close to digital assets for a very long time. What would you say what you're seeing this time around is different than the previous two bull runs?
Yeah, so the institutional demand and the linkage and intersection with real world assets, I think that's what's different. And that's why this Ethereum or ERC related statistic is extremely important, because it shows that momentum actually is becoming meaningful, statistically significant. I see the evolution of financial systems, financial markets, capital markets or capital flows, trade flows in particular, to become increasingly frictionless through applications like blockchain DLT. But think about this, if we have a world where capital instruments trade with no friction, settle and clear with no friction, and those capital instruments increasingly involve almost everything that you and I do every day: credit card debt, loan debt, mortgage debt, car payments, etc. Institutional scale that can take place right away. Last time I spoke to you a year ago, I said that evolution is going to mean that bankers aren't needed anymore, right? And I stand by that.
That's still your view?
Absolutely. But now, to answer your what's changed question, because of the real world asset interjection that is taking a lot of steam, certainly something that we are building, ecosystems that will create a greater synergy and intersection of real world assets into the DLT. That frictionless environment for capital trade flows, the large numbers, that 156 trillion US dollars is 85-90% capital and trade flows. Imagine that becomes frictionless. That becomes easy to manage. Capital velocity goes way up. Time to trade and settle goes down into seconds as opposed to days or weeks today. Guess what? All of this that we're talking about now, Pamela, is based on smart contracts, right? Stuff that you can pull down on GitHub. It's code. It's code. So literally that means that not only does this create a frictionless environment, capital velocity goes up, institutions' reliance on capital, which is generally speaking for banks extremely expensive, is better used. Now think of that in a further expansion or extension of that model. Eventually, capital, trade, flows, investment will become automated. So not only are bankers not required, but a lot of what some of the big names in real money institutional asset management will also not be needed.
But so you do want to play in that space to be an early mover.
Yeah. This is what rewriting the financial systems really means, right? Eventually, and okay, this isn't going to happen today or maybe even tomorrow, but this is the direction. But hang on, before you start thinking of, Arnold Schwarzenegger and self-aware machines, what that really means is that the formulation or the expression of pure economic activity is reflected real time in capital markets across the world, across asset classes. Yeah. Arbitrage free. Yes. Yeah. More than 10 times, 100 times, right? The amount of DeFi is going to be developed in the real world asset expression in digital asset form. So it's going to overshadow everything that we see today. All of that hype that you're reading about is going to look like a rounding error in about 10 years, maybe 5.
And if you distill this all down into one takeaway for our viewers, what would that be?
Yeah, that would be get ready for a streamlined and automated set of financial systems. Yeah. So that means us, banks, commercial banks, investment managers, asset managers, that entire world that has always been one corner of the macroeconomic universe. So the only word of wisdom I have is get ready for automation and the financial systems that we know today disappearing.
A very big thank you to our special guest, Eric Pascal, Global Head of Digital Currencies for Standard Chartered Bank. And thanks for tuning in to this episode of IC Your Trade Season 5. IC Your Trade is brought to you by IC Markets, a leading high-performance trading provider. Trade up to IC Markets. See you next time.